Okay, so we as intraday traders, we are more of trading within a day and taking profit within the same day. Okay, now as we are intraday traders, we also have interweek traders. All right, so these are people who trade within a week. They might place a trade on Monday, expecting to take their profits by weekend. All right. At the same time, we also have those who trade per month. They place their trade within the beginning of the month, anticipating to take profits at the end of the month. Okay. In the same manner, we also have traders who are full-time yearly traders. They place their trade at the beginning of a year, anticipating to take profit at the end of the year. Those who trade the week, the month, and the year are known as the institutions, the high institutions. All right, the big boys in the markets. Their lot size is beyond measure. Okay, their lot sizes is what your account has no value to it at all. So you don't want to challenge those kind of people when it comes to trading in the markets. So that is why it is always advisable that when the month is about ending or is ending, you want to be careful in the markets. All right. Why should you be careful in the market? You want to be careful in the market because this is the era when those who trade within the month are about taking profits. At that time, people are taking profits. About at that same time, some people are loading money in the market to run for the upcoming months. So it's a very dangerous time because at that time, markets tend to move at opposite directions against intraday traders or even against what you might be looking out for. For instance, you might have seen a head and shoulder anticipating the price should go to the downside. All right. But because these people are taking profits within the end of the month, and some are loading money within that same end of the month against the upcoming month, markets might likely move against your chart pattern that you're looking out for. Market might likely move against your confluence that you're looking out for to take a certain trade. So that is why you always want to be careful at the end of the month. If I must also advise you, I would say that even at the end of a week, you also need to be careful. All right. So this is for you to know that while you're trading Forex, you need to be absolutely careful when trading Forex. Okay. You need to be absolutely careful when trading Forex. You don't just jump into the chart and say, oh, it's bullish, let's buy. Oh, it's bearish, let's sell. No, you need to be careful. So you need to be careful how you trade, and you also need to be careful when you trade. All right. I hope I'm communicating. You need to be careful how you trade and also careful when you trade. Very, very important. So the month of October has just ended. And we all saw how the market was rough within the end of October. A lot of us noticed it, even in the markets. A lot of us had we all had analysis, and we saw the way price was moving against analysis within the end of the month. That was for you to really understand how the market really works when the month is about to end. Now we are in a new month. It is still not yet advisable for you to trade anyhow. You still need to be careful now that we are in a new month, because now we are in a new month. A lot of institutions are still busy loading money in the markets. A lot of institutions might decide that it's the first week of a new month that they want to take their profits, depending on when they actually took the entry. Okay, so even at the first week of a new month, you still want to be extremely careful with trading. Okay, but that's much said. Let us just go into the volatility 75 market and see what we should anticipate within this week All right, let's see what we should anticipate within today, this week, and probably this month. Okay, so before I proceed, use the chat box and let me know if you're hearing me clearly and if what I've said so far you really understood. If you really understood, just give me a comment. I understand. Okay, Peter said understood. Mr. Adam said I understand. Understood, Tim. Loud and clear. Good. So let us proceed into the volatility index 75 markets and see what we should look out for today. Now, this is the VIX 75 24-hour time frame. That is the daily time frame. Okay, so we can see clearly that this market is actually an uptrending market when it comes to the full-time movements. That's the month, and even the year, entire year is being a bullish market, as we all can see clearly from this end to this end is being an uptrending market. Okay, so as it's an uptrending market, it's currently at this time facing what we call a pullback. All right, this is just a pullback against the entire move of the VIX 75 markets. All right, let us see how much pullback this might be between here to here. Currently at the 0.786 Fibonacci level. Okay, and then sorry, I need to put that back to see. Okay, so price found rejection at 0.786 level of the entire market, and then the move began to the upside again. So why the move began to the upside? It was an uptrending market because price has begun to, because it was an uptrending market within here to here, because price had begun to break different structures. Okay, different structures. So while breaking different structures within, between here to here, let's see how many days that was. Between here to here was about 28 days. Okay, between here to here was about 28 days bullish run in the VIX 75 markets. And then what next? After that move, we notice what? A pullback. After that move, we notice what? A pullback. And let's see how many days the pullback has lasted. About, let me see, about 29 days. Okay, 29 days. The pullback within 29 days. And within that 29 days, a lot of people must have sold massively to this level. Okay, so why selling to this level? Price has gotten to a support zone. Okay, take note, we are still in the daily time frame. All right, I'm just trying to break down the daily time frame. So price now has pulled down to a strong support zone, because we can see clearly that this is an area, a very strong area in the markets. This is a very strong area in the markets. You can see how price reacted several times when it came to this zone. That is why we are facing this right now at this junction. Okay, so price is currently in a pullback. Price is currently on a support level, and we want to know, where is price likely heading to? All right, so now we must understand that all this error, we have to overlook it for now. We want to focus on what is happening currently. But irrespective of that fact, you must not neglect the move. All right, so you must still have a little respect to areas of reaction that price have reacted in the past, okay? These are areas of reaction. Why do I call it an area of reaction? I call it an area of reaction because something happened there in the past, and there's every tendency that price might likely want to go back there to retest as to react to what had happened in the past, okay? There's something we call institutional trades, institutional candlesticks, institutional market, and other blocks, and so much more. All right. So if you have an idea of those things, you would understand what might likely happen when price gets back to this level in the future. But for now, we want to focus on just what we see happening around here. Okay. So price currently, if we get to notice, is at a support level, not just a support level of the past, but also on a channel, is on a support level on a channel. These are two different confluences. All right. These are two different confluences, meaning that price might likely push back to the upside. But irrespective of that fact, we can see we have a pattern that price has formed here. Okay, get this. We have a pattern that price has just formed here that we should also respect. Okay, and that's what we call what? Head and shoulder. Okay, head and what? Shoulder. Price has just given us a head and shoulder. And a head and shoulder pattern, what pattern is that? Use the chat box and let me know. When you see head and shoulder in the market, what comes into your mind? Use the chat box, let me know if I have traders who are trade inclined. When you see head and shoulder in the market, what comes to your mind? Somebody said bearish. Somebody said reversal, bearish. What kind of reversal? Not just reversal. Is it a bullish or a bearish reversal? Somebody said bearish. Bearish move. Okay, traders are awake. All right, so we have head and shoulder here, but at the same time, we have price at support. All right, at the same time, on our channel, we have price at its support also. But there's something you must understand, all right? This channel is not valid yet. Why did I say it's not valid? I will tell you that because this is one mistake a lot of traders do make in the markets. So you need to avoid such kind of a mistake. When you have price coming to, let's say, the downside, okay, and then made a few reactions, okay, let's say a range. Now, if you bring out your channel like this, all right, this is one, and I'll bring out another one like this. Let me see. How do I put it? Okay, like this. Wait, you bring out something like this. How do I even draw what I want to explain now? Okay, like this. All right. Okay, now, if you bring out your channel on this kind of a move, this channel is valid. Why do I say it's valid? Because we have, this is the peak, okay? This is the peak. This is a first touch, and this is a second touch. This is the peak. This is the peak. This is a first touch, and this is what? A second touch. All right. Now you call this to be valid because you have one touch and two touch. But when you have a market like this, okay, when you have a market like this where there is no first touch, how much more even a second touch, that channel is not yet valid, because you don't know what price might do when it gets to that level. So for you to call this a valid channel, you want to see price react to that channel, move back to the downside. All right, and probably for that channel to be much more stronger, you want to see another touch to the downside. So this is what you call a valid channel. So for here right now, this is not yet valid because this is just the peak. Okay, this is just the peak, and this is your first touch after the peak. So for you to call this channel a valid channel, you want to see price react well to the upside and probably come and give it a second touch. Okay, and then you would say, okay, if price gets here, I want to look forward to buying. All right, because you know that here it's rejected in the past and push market to the upside. So there's every tendency that it might push again to the upside. So that's what makes your channel valid. So the reason why a lot of traders make quite some mistakes in the market sometimes is when they've seen the move, the initial move in the market, and they'll be like, whoa, it went up. So I'll just bring out this channel right now, believing that anytime it comes, it should react. And then you notice that sometimes price would come and even break it and continue to go to the downside. So you cannot confirm this channel to be approved yet until you see price push it back up. Okay, so if price pushes it back up, then you can say, okay, this channel is approved for, that is, I should extend it. That is, I should even extend it longer. All right, believing that whenever price comes back again, it should do what? React to the markets. Okay, I've just soiled my charts with a lot of nonsense. Let me, okay, I think they're going out. I think it's going out. All right. So I hope that was taken. I hope you guys understood what I just explained about having a reasonable or an approved channel. So right now, we don't know how this market would really go because we have the channel, right? But we have head and shoulder. So what is the market going to respect? Is it going to respect this chart pattern we have here and push to the downside? Or is it going to respect this support we have here right now and push to the upside? Or is it going to respect this channel that we've just created and push to the upside? Now, this is where you want to ask yourself, what is really going to happen in the markets? Okay, we have supports, we have a channel, two confluences to push to the upside, but we have a strong head and shoulder pattern, one confluence to push to the downside. This is where you want to be extremely careful in the markets. Okay, you want to be extremely careful in the markets because you don't know what might likely happen. So let's go to the lower time frames. Let's go to a lower time frame so that we can really see what is really happening in the markets. Okay, so here right now we see reactions in the markets. A lot of reactions, indecisions happening around the markets. Okay, so we really don't know what we want, what's going to happen in the market. So at this junction, traders needs to be careful. Okay, but you can actually place a buy. You can place a buy position expecting that this price should go back to the upside because this is a very strong area of support. So you can place a trade with a little stop loss with a high, with a high take profits of this first shoulder we have here. Take profit of this first shoulder we have here. Okay, let me change that color to red. Okay, so this should be your take profit 1 if price goes for you, and this should be probably your take profit 2 if price goes for you. So we have a very long trade to run with within the week if price really reacts to this zone. Okay, but if it does not react, if it decides to respect this head and shoulder, then we have this move. We'll just make this smaller and then take a short position. You want to take a short position around here. It's just a small stop loss. And then we have this move. All right. So there's about 5 to 44 risk to reward ratio with about 1,000 pips. Okay. With about 1,000 pips. And on this one, we have about 8 to 93 risk to reward ratio. Sorry, this one is about, let me see what we have here. Okay, it is about 223. Okay, it's about 1,000,000 pips. It's about 1,000,000 pips, 2 million pips. I'm going to say, right? This we have about, come on, a lot of pips. I can't even count it. So this is a very wonderful move if it goes, if it decides to respect to go to the upside for us. Okay, and if it decides to go to the downside, we still have a lot to make. This is for you to be in anticipation of the markets. All right, that's why I decided to make this video to show you guys what you should expect in the VIX 75 markets this week. Not even just this week, because before this move will give us all this we're anticipating, it might likely take a month or 2 weeks or 3 weeks, you know. So the whole thing is, you know what to anticipate in the markets. So right now, price is still reacting to this era, to this zone. Okay, price is still reacting to this zone. So you want to be careful for now. Okay, for those who want to catch a sniper entry, you can catch a sniper entry if price will really go to the downside. Then you know you caught a sniper entry. But if it goes to the upside, you still can catch your sniper entry, but you need to be extremely careful where the market is going to. Okay, you need to be extremely careful where the market is going to. Let's see the 1 hour time frame. In the 1 hour time frame, we can see another pattern. What pattern can you see? Use your chat box. What pattern do you see in the 1 hour time frame? If you're still awake, use your chat box. What pattern do you see in the 1 hour time frame right now? Bearish reversal, head and shoulder. Okay. We see head and shoulder. So this was so you can call this the mother head and shoulder, and this is the child head and shoulder. All right. Now, there's one thing you must understand in the market. There's a secret. Okay. So take it now. When you notice a pattern form in a higher time frame, okay, when you notice a pattern form in a higher time frame and get to notice that's kind of pattern again forming in lower time frames, though it is what we call multiple confluence, that price might likely go to that direction. It could be a head and shoulder and a double top. It could be a head and shoulder and another head and shoulder. All right. It could be a head and shoulder and probably a bearish flag. The fact is, as long as you see a pattern on a higher time frame proving bearish, and you notice another pattern on a lower time frame proving the same bearish, it gives you more confluences. All right. I always tell my students that your confluence is your confidence, because a lot of people will be like, hey, Tim, so how do I take this trade? You already have confluences, so be confident to take your trade. Okay. Be confident to take your trade. So now we have a mother head and shoulder proving in the higher time frame that market wants to go bearish. And now we came to a lower time frame and saw that mother chart pattern giving birth to a son or a daughter chart pattern of the same direction. So you should be in anticipation that price might likely head to the downside. But that is, take note, that is if it will only be able to break through this zone. You must not forget that this is a strong zone in the past. So if it's able to break through it, good. All right. So traders, you want to be in anticipation of two different buyers for the week. All right. Bearish or bullish. Bearish if price can break through here, this zone. If it breaks through the zone, be ready to sell massively. If it doesn't break it, be ready to buy massively, because there's a lot of pips to make in this market. Okay, there's a lot of pips to make in this market. So with your own trading idea, tell me what you want to anticipate in this market right now. You can turn on your mics. You can turn on your mics. Tell me what you think about this market for the week and why. All right, let me hear from you, traders.
Okay, good morning, everyone. Thanks, Tim, for the call.
All right, good morning, Lola.
Yeah, what I think it should be a bearish movement, and just because of the double confluence, as in head and shoulder on the daily, and then the same head and shoulder on the lower.
Time. Okay, so you think it should be a bearish pattern? You think it should be a bearish market for the week? All right. Any other idea?
Hello, Tim. Good morning.
Yeah, good morning to you.
Looking at the charts currently on my system, I actually anticipate it going bearish because I see a support below, and I actually anticipate price getting to that price that's below. That should be about 552730.5. That's actually what I'm expecting.
That's gonna be a very massive sell, right?
And that's gonna be a massive sell.
Okay. Any other idea, traders?
Yeah, good morning.
Yeah, good morning, trader.
Um, I still stick to bearish, because if you go from the monthly time frame down to the weekly, down to the daily, you see on the weekly price forming more like head and shoulder on the bigger. That's on the weekly. If you come back to the D1, you have multiple rejections already on that same zone. Even if you have confluences of head and shoulder on bigger time frame and smaller time frames, you also have multiple rejections to the upside. So I stick to the bearish movement.
Okay. Great idea. Any other anticipation? Any other anticipation, traders? What is your intake? What do you expect? So while taking your trades, you must understand that volatility 75 is a very volatile market. So you must know how you want to place trades. Do not over leverage. Okay? Don't over leverage when you take your trades, you want to be extremely careful on the lot sizes you open so that you don't blow your accounts. All right. So I hope this will be able to give you guys insights of what to look out for in the market and how you should look forward to taking your trades when the confluence aligns together. Any further question before I close up? Any further question?
No.
All right, traders. So let's keep winning.
Morning, Tim.
Yeah, good morning to you.
Sorry, some of us were not able to join immediately. We just joined. I'm wondering if the recording can be dropped for us so that we can go through it.
Yes, it's going to be dropped.
Thank you.
Absolutely.
All
right. All right. All right, traders. So let's keep winning and anticipating to grab a lot of pips in the markets for the week in the volatility 75 markets. All right.
Very good morning.
Good morning.
I thank you for this opportunity. I was just asking if VIP sessions will continue next year.
Yes, it's going to continue next year.
All right. Thank you very much, sir.
Very well. All right, traders. So let's keep winning. I remain your one and only forex coach, Team Legend. Keep winning, traders.